truck drivers across the country protest against the new law, Bharatiya Nyaya Sanhita, that is set to replace IPC. Under the law, hit-and-run cases can attract up to 10 years in jail and a fine of 7 lakh rupees. Those were the headlines that we're tracking today evening. Hello and welcome to The Reporter. Now let's take a quick look at how the markets have performed today. The Nifty and the Sensex both closed the day lower as IT and the auto sectors remained a drag on the indices. Broader markets have also closed in the red. Samina Naliwala joins us with a wrap of today's market action.
It was a day of consolidation on D Street. Profit-taking was the center of attention and on everybody's mind in terms of today's trade. The Nifty traded in a 200-point range, opened at 21,751, finally went home at 21,665. But what bulls will take heart from is the market did close at the day off the day's low point. Bank Nifty was leading the losses in today's day of trade. 1% cut on Nifty Bank, below levels of 48,000 on Bank Nifty. Broader markets outperformed the benchmark once again. The mid-cap and the small-cap again seeing some sort of buying that emerged in the last few minutes of trade, taking it off the day's low point. Mid-cap and small-cap both going home flat in today's session. Well, let's quickly take you through the sectoral movers because there were a few sectors that were actually helping the market in today's day of trade. But the one big sector and the talking point which was yesterday and today has been the pharma pack. Nifty Pharma going home with gains of 2.5% in today's trade. Media didn't do too badly. Metals also saw some buying. Energy saw a little bit of a pullback in the last hour of trade, with the OMCs and upstream and city gas distributors actually seeing some buying in the session. On the sell side, the list is far more extensive. Nifty Auto was down 1.4% on back of disappointing December sales numbers. IT seeing some balancing and profits being taken off the table ahead of the earnings season. Real estate was down about 1%. Bank Nifty, like I said, continued to lose ahead of options expiry tomorrow. MNC, services, finance, and the PSU Bank Index also seeing a little bit of selling in today's day of trade. All in all, it was an interesting session. It was a 200-point range on the index, but more importantly, this was the breadth of the market. Towards the end, the bias clearly was on the sell side, but there were a handful of gainers in today's trade. Like I said, pharma was leading the pack, so you had DVs, Sun Pharma, Cipla, Dr. Reddy's from this pack of pharma majors gaining pretty substantially in today's session. Across the broader markets, you had the likes of an Alembic, Lupin, GSK that also went home with very sharp gains. Adani Port reported very solid numbers in terms of port sales that we've seen, 42% higher year on year. On back of that, you're seeing a very sharp gain of nearly 3% on Adani Port, the stock going on at the day's high point. Like I said, HPCL, BPCL, IOC all saw some gains coming in. Coal India building on its rally from yesterday, trading at record highs, about 2.6% on Coal India is what we had. Well, if you look at the sell side, the picture is far worse actually. So you had auto stocks that got beaten down in today's session on back of disappointing numbers. So Aisha, M&M all doing quite badly. Hero MotoCorp, Maruti or Bajaj Auto all went home with cuts in today's session. HUL was down 1.5%, and IT stocks also seeing some weakness in today's trade. Well, it is profit taking at higher levels. That's what we are seeing. Global cues have been mixed as well. So there will be enough and more to watch out for when global markets, when US markets rather come back to trade later today. And that will of course be the driving factor in early hours of tomorrow's session.
Well, that was Samina with the wrap of all the market action today. Now, PM Narendra Modi on his mission south inaugurated and laid down the foundation stone of several projects in the state, Tamil Nadu. Accompanied by Chief Minister M.K. Stalin and the Governor, PM Modi also addressed the 38th convocation ceremony of the Tiruchi University. Now, remember, the total value of the projects in Tamil Nadu that are currently being inaugurated is pegged at about 19,000 crore rupees. These are dedicated to the nation and this is also including a solar power plant in Lakshadweep, which is the first ever battery-backed solar power project in the Union Territory. Now, as the FMCG sector deals with slow growth, Hindustan Unilever's large pack strategy appears to be paying off. The distributor commentary to NDTV Profit indicates a 5 to 10% growth across segments in the third quarter. My colleague Sesha joins us with more on this.
Right. So for brands, the larger packs result in instant volumes as they increase the number of units purchased in one visit. These packs are generally for family consumption, as it gives consumers, and it gives consumers the benefit of paying less per gram. Now, for HUL, this strategy is not new, as it has been pushing for larger packs across the modern retail trade for quite some time now. However, given that the strategy is paying off, the company has launched this larger packs in the general trade in a bid to drive volume-led growth. Now, HUL distributors say that the company has supported this larger packs with almost similar promotions as they have offered in the modern trade. Now, aided by the launch of modern trade SKUs in the general trade, distributors, they did indicate a 5 to 10% growth across segments in Q3 against the lower growth seen in the last several quarters. The move is not just helping them garner more value-conscious shoppers. It is also seen as a part of the strategy to keep off competition by making buyers procrastinate trials with other brands in the current inflationary setting. However, that said, the volume growth is likely to remain muted in the third quarter of the current fiscal, as rural demand remains elusive. Now, unless rural recovers, the FMCG sector is unlikely to see a material uptick in the volume growth.
Now, moving on, truck drivers across India are protesting against the new Bharatiya Nyaya Sanhita. Now, under this law, a driver may face up to a 10-year imprisonment and fine worth 7 lakh rupees in a hit-and-run case. Charu Singh joins us with more on how these cases were handled previously and what is the kind of disruption that these changes are expected to cause. Charu?
Some time back, new criminal laws were enforced in the country. According to these laws, particularly Bharatiya Nyaya Sanhita, the maximum prescribed punishment for hit-and-run cases is around 10 years and the maximum prescribed penalty is 7 lakh rupees. Now, earlier, the punishment for the same offence used to be 2 years. This has sparked a controversy among the truckers in the country and has also led to nationwide strikes in states including Western, Uttar Pradesh, Maharashtra, Punjab, Madhya Pradesh, and so on and so forth. Now, the truckers are saying that such provisions are going to deter individuals from entering the industry and are also going to be a reason for harassment of truckers. But it is also to be noted that almost 1,68,000, even more than that, number of fatalities in road accidents take place every year in our country, and around 18.1% of these road accidents, these fatalities, are due to truck accidents, which is a total number of over 30,000. Now, it is also to be noted that the school buses are also under the spectrum of this new law, which has led to strikes by school bus drivers in states such as Maharashtra.
Now, the strike is already causing supply-side disruptions, and there are reports that it's led to a rise in freight costs in several parts of the country. We'll continue to track that and bring more developments in that space to you. But moving on, a plea challenging the new law for the appointment of the Chief Election Commissioner and other election commissioners has been filed in the Supreme Court. My colleague Varun joins us with more on this.
A plea challenging the process for the appointment of the Chief Election Commissioner and the new election commissioners has been moved in the Supreme Court. This comes in the backdrop of the new laws that have been passed for the appointment of these election commissioners. Now, as per the new law, the selection committee which will appoint these election commissioners will comprise of the Prime Minister, the leader of the opposition, and a Union Cabinet Minister which will be nominated by the Prime Minister itself. Since this is in stark contrast with a judgment which came out last year which said that the selection committee must comprise of the Prime Minister, the leader of the opposition, and the Chief Justice of India, the plea seeks to get rid of this new selection process and asks for a neutral and independent committee to be set up which must include the Chief Justice of India, which will be in tandem with last year's judgment.
And with that, it's time to slip into a very short break. We'll be right back. Stay tuned. Welcome back. You're watching The Reporter on NDTV Profit. Now, the Maharashtra Labour Department has sent TCS a notice seeking a response about forced employee transfers. My colleague Tushardeep Singh joins us to tell us what he's been picking up on this. Hi, Tushar.
Hi, Pallavi. So, rightly pointed out that Maharashtra Labour Department has served TCS a notice on forced transfers that we first reported in November last year. So, while TCS sources have denied that the company has received any such notice, we have seen a copy of the notice which says that the Maharashtra Labour Department, TCS and the complainant NITES, a Pune-based IT/ITS employees union, have to meet on January 18th to discuss this particular matter. So, what is the matter here is that TCS has forced about 2,000 of its employees, specifically those in Hyderabad, for going on transfers to various other locations, including Mumbai, Delhi, Pune, and Bangalore, etc. So while this step was taken without proper consultation, that's what NITES is claiming, that this step was taken without any proper consultation with the employees, and they have been forced to move to other locations despite their apprehensions. So while TCS has denied these moves, they're saying that these are procedural. NITES has seen that we are looking at a particular discussion on this topic on the January 18th. We are not getting any comment from TCS at this point of time because it's in its silent period of earnings on 11th of January. Pallavi.
Well, we'll hopefully hear a little bit more about this post the company's earnings. Meanwhile, online travel service provider Easytrip Planners, which operates under the brand Easytrip, is planning to raise up to 1,000 crore rupees through a preferential issue. The company is also on an expansion spree. My colleague Rishabh joins in with more information on that.
That's right, Pallavi. Thank you. The board of Easytrip or Easytrip Planners has approved to raise about 1,000 crores via a qualified placement issue. What's interesting is that over the past few months, we've been seeing Easytrip diversify into a lot of different streams. They've acquired about a 13% stake in a hotel chain, a listed hotel chain called Eco Hotels. They've signed a partnership with the Vodafone Idea. They've signed another pact with SpiceJet. They've also entered into several different agreements with state governments and other startups to further their products. They've also signed up a sponsorship deal to provide travel for a Pro Kabaddi League team as well. So we're seeing a lot of interesting moves from the online tech travel provider. Though the stock closed about 0.7% lower today on this announcement, it'll be interesting to see where they decide to plow this money.
Thanks a lot for that, Rishabh. Now, moving on, auto sales figures for December 2023 are in, and it appears to be a little bit of a mixed bag. Passenger vehicle sales have witnessed a slowdown because of high inventory and lower demand, but two-wheeler sales figures saw a double-digit rise. My colleague Vinay joins in with a roundup of the auto sales figure for December.
As was expected, passenger vehicle sales slowed down in the December month because of the higher inventory and lower demand post-festive season. The problem is also the problem in entry-level vehicles where demand is slowing down considerably. But compared to that, two-wheeler sales saw a double-digit rise because the rural markets are recovering, analysts are saying, and this recovery is likely to continue after muted growth for several years. In the commercial vehicle pack, there was a mixed bag because right now we have seen that medium and heavy commercial vehicles are leading the sales. But for Ashok Leyland, that wasn't the case. There was a decline in sales exactly because of that segment for the company. In the tractor sales, we have seen that the fall has been more than estimated. And this is because of the delayed harvesting. And the next season of sowing is also delayed because of that. And analysts expect that this could continue for a few months and the sales could be soft for a few months in the coming financial year as well. So we talked as well with Maruti Suzuki's Shashank Srivastav and Bajaj Auto's Rakesh Sharma for their outlook on the auto industry.
Generally speaking, the auto industry growth is very closely related to the GDP growth, the per capita GDP growth. And there the projection so far is about 6.5% or thereabouts. And that's very positive because there is a very high correlation between the auto industry growth. In fact, correlation, statistically speaking, the R-square factor is about 0.983, which is a pretty high correlation. So anything which negatively affects the overall economic growth would affect the auto industry growth as well. Of course, auto loan rates, if they were to go up, will also adversely affect because 80% of the retails in the industry happens through the auto loans. And therefore, any interest rate hikes there would be negative for the industry.
Exports is in line with the expectations as what we were thinking, because it's a very muted recovery, if I may call it that. It's like, quarter two was better than quarter one, and quarter three is marginally better than quarter two, and quarter four we are expecting to be slightly better than quarter three. The entire export recovery is dependent on the macroeconomic situation working out, the volatility in the currency, both in terms of availability and rates sort of smoothing out, particularly in Africa. And we are well positioned, but it all depends on how these economies sort of even out now. They've bottomed out, but now we have to see how they can sort of come back to normalcy.
Now, the big global headline of the day was that 397 passengers and crew of the plane that caught fire at Japan's Haneda airport after colliding with the Coast Guard aircraft on the runway. The accident comes a day after a powerful earthquake had struck central Japan, killing at least 30 people, destroying buildings and knocking out power to tens of thousands of homes. Reports also suggest that the Coast Guard plane was scheduled to help with rescue efforts following the earthquake in central Japan. Now, moving on, formerly known as Twitter, social media platform X's valuation has dropped to less than a third of what Elon Musk had paid in 2022. Mampi Chakrabarti joins in and tells us a little bit more about what's trending. Hi, Mampi.
Hi. So, as you said, after Elon Musk's acquisition of social media platform X, it saw a significant dip in the sales. So, according to Axios, Twitter is now valued at less than a third of what Elon Musk paid for while buying. The billionaire takes over in October 2022, brought about sweeping changes on the platform, from laying off employees to changing policies. These changes didn't sit well with the advertisers, and it's reflecting now in the numbers. Twitter's ad revenue for 2023 is estimated 2.5 billion now, but the previous rate of this valuation was $1 billion per quarter. So we can see quite a dip in the valuation. Adding fuel to the fire, Elon Musk alleged public endorsement of controversial views drawn from the criticism. It has also affected the valuation. This has not only resulted in less followers and backlash, but it has also, have distanced the Walt Disney and Apple, big names, from the investment, and they have now paused their ads. So, yeah, let's see what 2024 brings in for Twitter, but right now it doesn't seem really going well for Twitter. So, yeah, that's it from my end. Back to you, Pallavi.
Well, thanks a lot for that. Speaking of X, my colleague Tamanna earlier spoke to the Railways and IT Minister Ashwini Vaishnav, where he highlighted the role of social media in containing AI. Listen in.
How do we, sir, keep Indians safe as these technologies develop?
See, this is an evolving field, and we are very clear in our strategy, very clear in our policy mindset. Take the benefits of the new technology, harness those positive things, simultaneously set very clear guardrails, set very clear boundary conditions, set very clear regulatory structure so that the users are not harmed. users can be harmed in multiple ways. So how do we tackle each of those? Misinformation, deepfakes, impersonation, using modulated voice to do a fraud, commit a fraud, financial fraud. All those things the platforms will have to take responsibility. They will have to deploy technologies. They'll have to deploy methods by which patently false information, patently misinformation, patently information which can create disorder in the society, can create problems for individuals, should be removed. And this is not something which only we are saying, right? The entire world is moving in that direction now. The entire world is worried about the impact that many of the social media platforms are having on their societies, on their institutions. So this is something which, and social media platforms also realize this. We have had lots and lots of consultation with them, and we do everything in a very consultative manner.
Well, to hear the rest of that interview, do log on to ndtvprofit.com. That's all we have on this show of The Reporter, and do join in at the same time tomorrow for another episode. Thank you.